Well, guys, I'm back, and like I promised you, I have with me the chairman of the State Bank of India, Arundhati Bhattacharya, who's debuting here in Davos. It's her first year, and she's braving the cold, I think, very sportingly, standing outside with us. Thank you, ma'am, for speaking with us here today. A first quick general question on, essentially the mood here in Davos, both the outlook towards India and the outlook towards the global economy. What are you picking up regarding 2015?
Regarding India, I think there's a lot of interest, huge amount of interest in fact, and especially if you compare to last year when I didn't come, the reason was because we hardly got any feelers, regarding meetings and things like that. In respect of the global economy, I think people are cautiously optimistic. Of course, US continues to remain a bright spot. The understanding is oil prices will go up, but not too much. Also, the QE that has just been declared by the ECB, that is sort of perking up sentiments in respect of Europe. Those people still feel that a lot of structural reforms are also required for that economy to really get past the fragile state. But overall, I think it is optimistic, excepting for those nations that are mainly dependent on energy exports and maybe commodity exports. Other than that, I think the rest of it is quite positive.
Okay, let me talk about India and SBI. The first question has to do with news, and it has to do with Suzlon, which has just announced a big deal this morning about the sale of one of its subsidiary companies, Senvion. What will that mean for the ability of lenders to now get back some of their money from Suzlon? I know the deal is just fresh, and you're here in Davos. The time difference and all of that means you may not have all the details, but whatever you know so far and what you can tell us.
As you know, we have been pushing with a lot of people to sell assets in order to deleverage balance sheets. I think this deal of Suzlon is precisely in that line. The entire proceeds will go towards repayments of debts. And to that extent, Suzlon, the interest burden will come down substantially. It should enable them to turn around and become a much bigger and a better company because of the lessening of the debt burden and because of the huge opportunities that the Indian economy is now throwing up. As you know, renewables is one of the major focus areas of the new government. Suzlon is excellently placed to take advantage of those government policies, and therefore, it was necessary for them to get past these regular worries that they had because of the huge debt that they were sitting over. So I think it's a deal in the right direction. We are all very happy. We've been talking to the promoter, in fact recommending it, pushing him towards it for quite a long time, and therefore the fact that it's happened, we are very happy.
There was resistance by the promoter to
it's not resistance, it's a question of them wanting certain valuations, which were a little difficult. So I think, we've been in constant touch with both the parties concerned, and we have managed to convince everybody that it's a good deal from both sides, and that's how it's happened.
Okay, the data I had seemed to indicate that SBI's exposure to Suzlon is in the region of 3,500 to 3,600 crores. Would that be in the region of correct? And how much of that debt would get retired as a result of the deal that's just been decided?
Actually, that's difficult for me to tell you because we have to see how much was the debt given for this particular unit. So it will be pro rata divided amongst all the people. But as I said, it will be substantial saving of interest for the corporate.
Okay, and a big return, in terms of money that comes back to you as well, right? Okay, let me get away from Suzlon now and talk a little bit about banking and the Indian economy. The RBI just a couple of days ago, made this new announcement on base rate, and how it gets fixed by banks. What is your take on how it will impact base rates, especially at SBI?
Again, that's something I have to go back and look at. I haven't had a look at it as yet because there has been a lot of complaints from industry that there is no transparency in the way the base rates are getting fixed. I think that is why RBI is trying to give some clarity to that. But having said that, basically the rates of the banks will depend upon the funding cost and the efficiency of that bank. And again, efficiency can be termed in so many ways. But basically, it's your expenses as well as your funding cost that determines at what rate you can give, because you need certain margins. So to that extent, I don't think there will be a very material impact. There might be better understanding of how we are getting to those rates, but I'm not too sure as to how much of a material impact this will have.
Okay, fair. Do you expect base rates, besides just this RBI sort of change in policy, base rates otherwise to start going down? Have you sort of decided on when you might cut base rates at SBI?
I haven't decided when, but definitely, you know, we have seen the beginning of the easing cycle, and obviously going forward there is a very real possibility of rates going down.
Okay.
And again,
what is the timeline for going forward? I think that's what everybody's trying to time.
Yeah,
and you know, by what quantum will it be? Will it be you know, the 25 bips that the RBI sort of decided on, or could it be more?
See, it would depend a little bit, I think, on credit pickup as well, because at this point of time we really don't have too many proposals which are of any, you know, which are good in amount, so to speak. And therefore, until and unless we see some amount of credit growth going forward, the day I cut the rates, I start making less money. On the other side, even if you cut the rates of deposits, that factors in over a period of time, because it only relates to the newer deposits that are coming. Yeah. So to that extent, you know, you've got to balance both of these to ensure that your NIMs don't get impacted too badly. Given the fact that, as you know, we still have quite a bit of stressed assets on our books, the requirement for provisioning is only on the way up. And therefore, you know, obviously we have to keep that in mind when we go ahead and cut rates.
So, ma'am, when will you cut rates?
I don't think I'll answer that.
Not this quarter?
Let's see. Again, let's not
this
jump
quarter,
the gun.
we're only in the beginning of January.
Let's not jump the gun, as I said. But it will happen. It will happen.
Okay. What is your assessment of credit growth? I think you did something like 10% April to December. Has it looked like it's likely to pick up at all? Though you've already told me that the proposals don't seem to be good, both in quality and number. But your assessment of credit growth, and if FY15 is not showing an improvement, do you think it could take place in FY16?
It will definitely take place in FY16, but even the first 2 quarters, I think it will remain muted. Again, as I said, you know, it takes time for this pipeline to build up.
Yeah.
Any large project, it takes time for it to get on the ground. And not only do you have to do a lot of planning, you have to get approvals, you have to get land acquisition, then you have to get the equity, and then complete the financial closure. So all of this takes time. It's not something that happens overnight. You have to give it time for it to happen. Also, people must get back the confidence, you know, that things will work. Because after what has happened in the last 3 years, when things didn't really go as per plan, you can't blame people for being more conservative, for being more risk averse. So to that extent, you know, to restore confidence that things will be different this time around, it's going to take a little time.
So what's your expectation for credit growth in FY16, roughly speaking?
FY16, probably we should be in the range of 14% or so, hopefully, if we see the credit growth coming up in towards the later part of the year. But this year, I don't think we'll be able to exceed anything beyond 11 to 12% on the outside.
Okay, and in terms of NIMs, what would your expectation be?
NIMs, I think we'll try and hold it where it is. We have a domestic NIM of around 3.5. I think that's where we have been trying to sort of balance ourselves, basis points here and there.
Right.
But that's where we'll try and hold it.
And that's where it will be in FY16, or do you see some pressure on that if lending rates start coming down?
I don't see too much of pressure if we can get the volumes as well. Because the volumes will mean that there will be new lending, and new lending, obviously, there will be more of a risk element to it, so we'll be able to price it properly. So hopefully, you know, as new lending kicks in, we should be able to withstand any pressure on the NIMs.
Okay, 2 more sort of questions, you know, that are related to the financials of how your bank and public sector banks are doing right now. Asset quality, do you expect an improvement in FY16?
I do expect an improvement in FY16, like you have seen this current deal that you talked about. There will be many other such deals, because we know of a lot of conversations going up and going on in the industry. And I know that a lot of corporates, they are very assiduously looking for sale of core, non-core assets in order to deleverage balance sheets. So as and when that happens, obviously it will have a knock-on impact in the asset quality of the banks itself. Not only that, we are also looking at the government debottlenecking some of the projects that currently have not been completed.
Right.
And that debottlenecking exercise again will involve a number of things. So all of those steps we have been talking to with the government, and the government has confirmed that they are looking at these things. So as these things happen, as these things kick in, hopefully the asset quality will show a turn for the better.
So stressed assets were at 12.6%, I think, as of the data we have as of September last year. What do you expect will be the numbers, let's say, in FY16 roughly?
You were talking about the industry.
Yeah, the industry, not SBI. Not the industry.
Yeah, exactly. 12.6.
No, the industry, not SBI.
Okay. But it should drop, if we have some of these large assets getting off, that itself will bring it down substantially. So I think, overall this will be a much better year. It's difficult to project, because each bank has a different kind of a set. For instance, many banks have a lot of gas-based assets. We don't have them. Now, if there is a gas pooling mechanism that the government is considering, if that comes in, then those assets will become performing. So for those banks, it will make a big difference. Similarly, the discoms. Again, we have very little exposure to discoms. Now, if the government does something very seriously on the discom side, many of the public sector banks will benefit from it. So, the composition of the book is different, even though we may all be in the public sector. It's widely different from one public sector to the next.
So I'm trying to ask you to generalize. Okay, so will profitability across at least some of the key public sector banks, especially yours, improve dramatically in FY16, especially because, with interest rates coming down, your bond portfolio will give you higher and higher treasury profits. So are you expecting not an incremental increase in profits, but a substantial increase in profits in FY16?
Substantial increase in profits will happen when our asset book becomes better. Because at this point of time, I think most of the profits are getting eaten up by provisions. Yes, the bond portfolio will yield some good numbers, but I don't think, as bankers, we are looking at that so much as trying to ensure that the books are cleaned up to the extent that it's possible and having as much of provisions as we can. It's only once we get past that hump that you will begin to see much better numbers. Okay,
a couple of other questions besides earnings now. The Jan Dhan Yojana, the government has spoken of it as a spectacular success. 99% of households in India covered by this. Finally, they have a bank account. Yesterday, I was talking to Uday Kotak, and he said the public sector banks have done a phenomenal job in reaching out to people. But now the challenge is in getting them to put money into those accounts, operate those accounts, and therefore use them to become part of the financial mainstream. How are you at SBI working towards getting people to do that? What is the potential there?
The potential is huge. I keep saying that there is a difference in this financial inclusion program from the earlier ones. And the difference this time is that it's a very well-rounded program. Not only are we opening accounts, we have been assured that if we can get them linked to Aadhaar, the DBT in respect of any of the subsidies that the government will be giving to the people, anything that will happen in cash will flow through these accounts. Now that's something that will definitely make these accounts operational. But even before that, what has also been done is each of these accounts have been given RuPay cards.
Right.
Now the RuPay cards enables people to cash out from various places. They can use bank branches, but more likely they will use an ATM or even a cash at POS. As you know, we allow cash outs at POS machines also. Now it's difficult to maintain a bank branch in every village. It's also difficult to maintain ATMs in every village. But it's not difficult to maintain POS machines. Because POS machines normally would be at the grocery stores, at little centers, where they already have cash. So for them, cashing out is not a problem. So, the entire infrastructure of making cash available, you don't have to do much about it. Now, as a result, what happens? The access to these bank accounts for these people becomes much
easier.
So, as we have the kiosk solution and as we go through the banking correspondent model, these bank correspondents will be able to do almost everything other than make loans. Okay. So, to that extent, it is going to be much easier for the people who have the accounts to actually operate the accounts. They won't have to waste a day trekking to the bank branch. They can do it on their way up and down from work. They can deposit cash. They can take out cash. They can do all of these things. So therefore, it is going to be much easier to make these accounts operational. Added to it, there is an incentive that if you use your card at least once a month, then you get covered by insurance, both the accident insurance and the life insurance. That's a big incentive. So, it is in everybody's interest to make these accounts work. It's in the interest of the people who have the accounts, because then, they get into the banking sector, so to speak. And we have also promised that depending upon the kind of transactions we see in 6 months, we will also make loans available.
Wow.
So to that extent, it's a very, very well-rounded program, I think. And if you look at it, I believe that this time around we will see much better traction than we have seen in earlier years.
Oh, wow. That's very encouraging to hear you say that, because it just seems like almost unreal to know that within a couple of months we've gone from, a half-banked country to an almost fully banked country in that sense, right?
Yes.
At this point in time. Is there any way to gauge what the timeline would be before you start seeing, let's say, the bulk of these accounts become regular functioning accounts? Or is it too early to tell right now?
We were looking at, in our bank, 74% accounts with zero balances. So we have taken up a project whereby we are giving the business correspondents a little more incentive to get money into the accounts.
Sure.
Now this has started in the last 3 weeks, and I had a report day before yesterday saying that 600 crores of deposits have been mobilized.
Wow.
So there is money out there.
In just 3 weeks?
In just 3 weeks.
Just 3 weeks.
In just 3 weeks. Because we have given a little extra incentive to the business correspondents to ensure that money comes into the accounts.
Fair enough.
That there is credit in the accounts. Now, similarly, we are now starting a program for Aadhaar linking of these accounts. We had put out an RFP for agencies who will do the Aadhaar enrollment for us.
Right.
That RFP has been gone through. 3 agencies have been already selected. So now we will be beginning to ask these agencies to go and sit at those camps, get the Aadhaar numbers, link them to the accounts. So I believe, this time it has been run in a much better manner, in a mission mode, with the right kind of incentives. And I think the government is also very keen that it works. They have, I am told, agreed to pay some amount for the transactions that they originate on these accounts. So all of these will make it possible for banks like us to actually, make these functional.
Okay. You had an interesting Gyan Sangam meeting with the ministry officials and the government officials.
That's right.
2 questions I want to ask you regarding the outcome of that and what you take away from that. A, in terms of capital, and B, in terms of consolidation.
See, in terms of consolidation, I think what was decided was that there wouldn't be forced consolidation. That rather, conversation should begin between the banks as to who would like to go with whom. And not only that, while they were at it, the banks would try and improve their workings so as to become, people who are wooed rather than who are sort of pushed into
a combination.
Exactly.
Okay.
So to that extent, I think the idea was that we should start these conversations. Consolidation is definitely something that has to happen, but it will be something that should happen more because the industry feels the need to consolidate rather than because somebody somewhere theoretical. Yes, I should think so. I should think that would be the timeline.
And the crucial issue of capital, ma'am?
Capital, again, I don't think there was any decision taken regarding capital. Rather, what was talked about...
That's disappointing, isn't it?
No, not really, because what we talked about is empowerment. We believe that, if you can enable the banks to live up to its potential, capital would not be a problem. Today, capital remains a problem because of the perceived inefficiencies in the public sector. So if we can take out that bit, I really don't think that capital will be an issue.
What perceived inefficiencies could you take out that would not require you to need further capital from the government?
No, the thing is, it's not a question of further capital from the government. The inefficiencies that are seen by the market as such, for instance, I'll tell you the quality of the board. Traditionally, the public sector banks have boards with people with experience in industry, in agriculture, in finance.
But
today, you need people with domain knowledge and risk in HR, in IT, in management.
But how will that reduce your capital requirements?
It's not a question of reducing. It will enable us to get more capital from the market. What I'm trying to say is the source
of that capital from the market, in a sense, diluting the government ownership.
No, that was discussed.
The government will have to cough up a proportionate amount.
No, that's true. That's true. But I think the differential voting rights issue, was also deliberated upon, and the government has agreed to look at it.
Are they looking at DVR shares for banks?
Yes. They have decided to look at it. Now, how much that will happen and when that will happen, that's a question.
That's very interesting. So they are looking to consider if they could issue DVRs or banks whereby you don't give away voting rights, but you do give away economic interest and use that to raise funds.
That's right.
And that could be the next route through which you can raise further capital, is it?
That's right.
When will you get a decision on this?
It's difficult for me to say.
Did they put down a timeline on it?
No, not really. I think the draft report has just gone to them regarding what were the discussions and recommendations. They'll come back with some timeline on this. We also discussed the setting up of the holding company. And it was decided as a first step that we would have what would be called a bank bureau. And the bank bureau would actually look at improving quality of board, ensuring that the top management positions get filled in the right way at the right time, and laying out a transition path to the Bank Investment Corporation. So I think, those were the two major things that were discussed, and
so the wheels have been set in motion.
Yes, probably there will be action going forward.
Final question then in the interview. The budget is around the corner. This time it might take away our weekend because it's likely to be announced on a Saturday. What is your key expectation?
Well, key expectations, we have given a whole ream of expectations. We have created an entire budget document that we have given. But, we have expectations in many areas. So, even if you say start from agriculture, we expect that, there should be more subvention on the term lending side rather than on the cash credit side, because we believe that capital needs to be created in agriculture. Otherwise, the absorption capacity of agriculture for credit is not getting created. Similarly, if say in respect of retail loans, we believe that there could be some more incentive given to first-time home owners. Then say for the education loan, whether we could consider those who don't take the rebate on account of tuition fees, whether the education loan repayment could qualify for the same kind of rebate. And similarly, they have already, I'm told, set up the guarantee fund for guaranteeing education loans below 4 lakhs of rupees. So things of that nature. Similarly, on industry also we made a number of recommendations. I think one other recommendation that was made, and I think that is very important for us, is to how to bring down the cash intensity of the economy, how to reward the use of plastic and penalize the use of cash. That is again something that we look forward to. So I think a whole raft of suggestions have gone to them. Hopefully
we should devote another show to the entire booklet that you all have produced at State Bank of India. I'm just going to go back to one thing you told me at the beginning of the interview that I think we should probe a little bit further. You said that it was on your insistence, if I may use that word, and the insistence of other lenders that Suzlon finally decided to sell Sanvion, and that you all have been doing this with other promoters as well. So can we expect in the months to come many more such asset sales so that banks are finally able to reclaim their money? Because this has always been a sticky issue with India.
But I think, we've been saying this from every forum that the lenders have been pressing on the promoters to come out where they feel that it's not adding value. It's also up to the promoters to determine whether they're getting the right price or not. But, I think the Indian promoters are also coming round to the view that yes, at certain points of time, they need to take certain action. And you've seen that. This is not the first deal that has come. You've seen other groups also making big announcements regarding deals, and as I said, going forward you'll find more such deals coming up.
Ma'am, to you and the entire banking industry, congratulations. It took them 10 years to get Ispat to sell its plant and business to JSW. You all are now able to move much faster and convince promoters. This is a culture change in India.
But you must, at this point of time, I must say that you must congratulate the promoters as well.
I will when I meet them, but I must say that you all have managed to convince them. So that's great. And the sun has come out, as you can see, to welcome you to Davos. Thank you very much for your time here. Have a great rest of the week.